Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is September 30th, 2025, and we're diving into Nike's fiscal 2026 first quarter earnings report. Joining us is John, senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. It's a pleasure to discuss Nike's latest financial performance.
Let's get started with a brief overview of Nike. As the world's leading designer and marketer of athletic footwear, apparel, and equipment, Nike has just released its fiscal 2026 Q1 results. John, what are the key highlights from this report?
Nike reported revenues of $11.7 billion, which is a 1% increase on a reported basis compared to last year. However, on a currency-neutral basis, revenues were down by 1%. The diluted earnings per share came in at 49 cents, which is a 30% decrease from the previous year.
Revenue and profitability overview. Let's start with the top line. Nike reported a net revenue of $11.7 billion for the first quarter of fiscal 2026. John, can you elaborate on the revenue performance and profitability?
Absolutely. While the revenue saw a slight increase of 1% on a reported basis, it actually decreased by 1% when adjusted for currency fluctuations. The gross margin decreased by 320 basis points to 42.2%, primarily due to lower average selling prices and higher tariffs in North America. Net income was $0.7 billion, down 31% from the previous year, reflecting the challenges Nike faced in maintaining profitability.
That's quite a significant drop in net income. What factors contributed to this decline?
The decline in net income is largely attributed to increased cost of sales and a decrease in gross profit. Additionally, the effective tax rate increased to 21.1% from 19.6% last year, which also impacted the bottom line.
Segment performance and strategic initiatives. Moving on to segment performance, how did Nike's different business segments fare this quarter?
Nike direct revenues were $4 billion, down 4% on a reported basis. This was mainly due to a 12% decrease in Nike brand digital sales. On the other hand, wholesale revenues increased by 7% to $6.8 billion. Converse, however, saw a significant decline, with revenues down 27% to $366 million.
Nike's CEO, Elliott Hill, mentioned the Win Now actions. Can you explain what this entails?
Certainly. The Win Now actions are strategic initiatives focused on key areas such as North America, wholesale, and running. The CEO emphasized that while progress is being made, there is still work to be done to align all sports, geographies, and channels. The aim is to maximize Nike's complete portfolio over the long term.
Financial health and shareholder returns. Let's discuss Nike's financial health and shareholder returns. How is the company managing its balance sheet?
Nike's inventories were $8.1 billion, down 2% from the previous year, which is a positive sign of inventory management. However, cash and equivalents decreased by approximately $1.7 billion to $8.6 billion, mainly due to cash dividends, share repurchases, bond repayment, and capital expenditures.
Speaking of shareholder returns, what actions has Nike taken this quarter?
Nike returned approximately $740 million to shareholders, which includes $591 million in dividends, up 6% from last year, and $123 million in share repurchases. This reflects Nike's commitment to returning value to its shareholders.
EPS forecast and analyst expectations. John, analysts had forecasted an EPS of 28 cents for this quarter. How did Nike's actual performance compare?
Nike reported an actual EPS of 49 cents, which is significantly higher than the forecasted 28 cents. Despite the 30% decrease from last year, the actual EPS exceeded analyst expectations, which is a positive takeaway amidst the challenges faced.
What does this mean for investor sentiment and future expectations?
The mixed sentiment reflects the challenges Nike is navigating, but the higher-than-expected EPS provides some optimism. Investors will be closely watching how Nike continues to execute its strategic initiatives and manage external headwinds.